paying any rent or something, but still look at the profits of the banks. They are huge, in billions of billions of profits they are getting. Why? Because they are also involved in foreign exchange currency markets, and if they earn 1 cent on each dollar, so they are conducting 300 million, 400 million, $1 billion transactions. So they will be earning on a daily basis, or maybe on hourly basis, they are earning thousands and thousands of dollars, right? So that's why the introduction to the banks in this industry also have an impact on the competitiveness. If you want to stay in the business, you quote your position at a lower, because remember that one, lower profit doesn't mean that it's bad profit. Look at the magnitude. 1 million on the top of 1 million, multiply by 1 cent, answer is $10,000 on one transaction. That's it. 2, special relationship with the bank. So if you have a business, if you have a MNCs who has opened an account, and you also allow the banks to manage cash on your behalf, foreign cash on your behalf, so you have to just pay a little service fee and that's it. So it means bank can keep bigger base of their customers as well. So cash management services, or willing to make special efforts to obtain even hard to find foreign currencies for the corporation. For example, Venezuelan currency, peso, or Mexican peso, because that are not widely tradable currencies. So if I want to have a service with the Mexican investor, and I don't have peso, I can ask my bank to arrange peso for me. If not, then I would be maybe changing my relationship with that one, and I would be customer of that bank which provide me these kind of services. So in order to retain the customers, bank not only dealing with the foreign exchange through competitive rates, but also help you to find hard to obtain currencies. So that is the characteristics of nowadays the banks that are guiding the foreign exchange markets. Speed of execution. So of course you will prefer that bank which deliver the services quickly, right? Which can handle the paperwork properly, conduct the transaction more promptly, more quickly, right? Service about current market, advice about current market conditions. Of course, because banks are dealing with day-to-day transactions with different banks, with the different companies, with different people, so they have more up-to-date knowledge of the market as well. So what's going on in the market, they already know that, right? So okay, if there is a crisis coming on the automobile industry, and your business is to provide raw material to the automobile industry, maybe they can call you and say that, okay, sir, we have this information, there is a market crunch going on in automobile industry, so be careful while providing services or providing supplies to the automobile industry, or maybe just receive your cash as quickly as possible. So they're going to give you more up-to-date information on current market trends. So some banks may provide assessments of foreign economies, relevant activities in international financial markets or environment to its customers, right? And why they are doing that? In order to stay competitive, in order to retain more customer base, and of course, in order to get more profit. Here we go. The last one is forecasting advice. So which is also primary, function of the banks nowadays. If I want to conduct the transaction after 3 months, and because I want to replace a plant which cost me $10 billion. So it's not like that at a matter of seconds I can arrange money. No, you need to arrange money. And then when you have a transaction, then you need to see that whether on that day, this transaction is going to be benefited to me or not. So when you have a transaction on a specified day, so you ask banking services, what is your forecasting advice? What will happen after 20 days? Market of the dollar will go up or go down. So if you want to pay money, So you hope that your home currency appreciate so that you pay less amount and they receive the exactly amount. And if the market is going down, then what is the preferable way to pay right now or pay later? So you ask different kind of forecasting services. So we will be talking about this in details. So don't worry about that. So these are the banking attributes that helps a bank to stay competitive in the market, and also, to maintain special relationship with the bank, speed of execution, advice about the current market, and forecasting advices regarding the value of exchanges. So any question right now? You guys understand? Oliver, PD, Ruchie, Dayon, Sufyan, Lancelot,
Yes.
Tara, Nina.
All good. Good. Thank you.
Yes, sir, it's clear.
Good, 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 good.
I
Now,
have a question.
sure.
Is it possible for a bank to hold a certain amount of shares of a stock, for example, or whatever, and then let it trade within the bank to their customers?
Yes, they can also do that. When they provide this kind of stuff, they become agents. So right now, like I told you, under one roof. So there's a big bank, like 20 stories bank, you have seen that. So in that banking, there are different segments: retail, corporate banks, office, investment bank office, risk management office, currency exchange office. So there are like different kind of offices in the banks, and they offer these kind of services. So if you want to buy a different company's share, you can call the banks on your behalf. They can buy it. Or if they see that, okay, they have, especially their investment banking department, because they have excess cash, though they need to mobilize that cash, and they find out that, okay, this stock is going up, so why don't we just purchase it, keep it for 3 days or 10 days or 30 days, and after that we sell it to the market and we earn some money. What if in between some customer comes, your customer, and say that, give me some portion of that, stocks to me? It's easy for you to transfer. That's it. Nowadays, any kind of financial services, a bank is ready to provide, like house loans, everything. Every department is now under one roof, under one bank. Right, Oliver?
Yeah, but how do they maintain the same price as the market? If they buy a certain amount of shares and let their customer trade those shares to have a faster execution, for example, how do they maintain the same price levels as
Not the
the
same.
market?
It's not the same price level. It's up to the what's going on in the market right now, that will be traded on the market rate. It's not like that they need to maintain that one. So what you are trying to do right now, that is the shares. Right now we are talking about the currencies. They can also do that. There are clearing houses that do this kind of stuff. We call this clearing houses, who basically kept the bundle of companies shares in their wallet and help you to trade. So they basically, if you want to buy this, they can allocate certain stock of shares to you on a specified maybe predetermined rate. So there are different strategies of that one. We have long, short options and all those stuff. So that is, it's possible. Even for a bank, it is possible. So don't worry about that, how they maintain the market price, because market price is going to be maintained through daily basis. So whatever is the price of the market, a person need to pay the market price. That's it. It's not like that you need to buy on a previous market rate. No, that's not going to happen. Oliver.
Yeah.
Understand?
Yeah, I understand. Does that mean that I can buy shares from one bank and sell it to the other bank for a higher price? And get the?
Very good question. We call this arbitrage. Not only we can do shares, we can also do for currencies as well. Buying dollar from this bank and selling this dollar to other bank. We will talk about these strategies in our coming lectures. We call this arbitrage. We call this international arbitrage. There are others as well. So we will be having a specific chapter on that, but at this time, it is more advanced level. So when we talk over there, that will be, cleared over there. So yes, we can do that. Oliver, we can do that.
Okay, thanks.
Okay. Now let's, dive deep into the world of numerics on international finance. So we have exchange rate quotations, how exchange rates are going to be sold and bought quantitatively. Qualitatively, we just talk about the discussion. How, what is security, who maintains, what are the, factors affecting, the exchange rate and all those stuff. But let's quantify those stuff. So remember, the exchange rate quotations are presenting on dealer's perspective, on seller's perspective. So bid and ask rate. It's not like that, the price of the dollar is like that. So you cannot say that what is the price of the dollar? No. You will say that what is the bid price? What is the ask price? So think in terms of international financial, terminologies. So bid rate is buy rate of the dealer. On what price the dealer will buy from you. Remember, the bid ask rate is, bid means buying rate. Start from B, it's a hint, buying. Ask, you have an S here, it means selling rate. But with dealer's perspective, if I have the dollar and I want to sell it, so which rate the dealer will purchase from me? Bid rate, because dealer will buy from me. I am selling, but dealer will buy, but dealer is buying. So dealer will quote me bid rate. So at any given time, a bank bid rate, which means buy rate or quote for a foreign currency, will be less than its selling quote. It's a normal case because selling is always greater than buying, right? Sell rate is always greater than the bid rate, or ask rate is always greater than the bid rate, right? So remember, this ask and bid rate is for dealer's perspective, seller's perspective. Ask means dealer will sell you. Bid means dealer will buy from you or seller will buy from you. If customer want to sell, dealer will buy. So dealer will buy at bid rate. If customer want to buy, it means dealer will sell to the customer. So dealer will quote ask rate. So many students, they confuse because they think that bid mean my bid. If I want to buy, I should be paid bid rate. No, if I want to buy, I would be paying ask rate. Why? Because I am customer and the other counter person is dealer. So dealer want to sell. So if customer want to buy, dealer will be quoting ask rate. If customer want to buy, dealer will be quoting ask rate. If customer want to sell, dealer will buy. It means dealer will quote bid rate. Understand, everyone? Tara, Meena, Tiffany, Ruchie, Sufyan, Dion.
Yes, all good things.
Thanks.
So that is very important because all our future discussion is going to be depending on this bid ask, bid ask. So never confuse about this stuff. This is dealer's perspective. Dealer's perspective means if I am buying, I'm a customer, I'm buying, I will be